All right, ladies and gentlemen, I hope you had a wonderful weekend. We got a really exciting week ahead, but before we talk about that, we have to talk about what Jerome Powell did on Friday at Jackson Hole, and the answer is nothing. So if you're not familiar, last week was all about NVIDIA and Powell. We got to the event, the market moved like 2% the day before, and then Powell came on, and he didn't flag any upside risk to the neutral rate. He did not push back against any rate cut expectations, and you could read what's in bold on here. He did talk about good and bad, but at the end of the day, he took a balanced approach, and it was the same thing that he has been saying this whole time. So why I'm telling you that now is because what we're getting into this week, it will be a result of what happened, but I have a hot take for you. Believe it or not, even after the movement, this was even Friday too. You see the Powell moves and then it chilled out, but you see where the market is. Well, some people will call this neutral. So I'm going to share something that came out over the weekend. It was Michael Hartnett with Bank of America. He is very bearish. If you don't know the theme of August, it has been bearish. So we have a couple of things to talk about and where we move forward now after Powell. We got 2 or about 3 weeks until we get the next FOMC meeting, SEP, and then all of that good stuff. So, Chad, we got a lot to talk about. I got the breakdown. I have the rundown. I have the plays. We got to talk about the chip plays. We got to talk strategy about Rite Aid. Oh, man, if you didn't see it on Friday, oh, my goodness. But it's going to be a longer play now. But I have an idea for you. That's what we're going to go over. And then we're going to talk about what to expect this week and how we move forward. And I got a couple of other plays, too. So, Chad, I need that thumbs up from you. I need to make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stock Market. We will see you there bright and early, Chad, but run it.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, ladies and gentlemen, I forgot about the random account generator, so please post the option trade below in the comments so that we could do this in the morning. But why I brought up Powell to you is so that you can understand the narrative. Everybody was waiting for something. We outlined the many things he could have talked about, all the way from the crazy stuff to what was more realistic. And once again, Powell came in neutral, and I think he calmed down the Jackson Hole event. But why is that so important for this week? Because now we get a bunch of random economic data sets from all across the board. So if you go through the schedule, you're going to see it starts with bond auctions, then we're going to get a little bit of real estate, some retail sales, then Tuesday you get the job openings, then you get the Dallas Fed services. I think Monday morning, I may have skipped that. You got Dallas Fed manufacturing in the morning, so we're going all over the place. You will get data overseas, Great Britain, Eurozone, Japan, but for the most part, even as far as America, we keep going down. You'll start seeing things like PCE, and pretty much as we get to like Thursday and Friday, you start to get PCE numbers. Then on Friday, you get non-farms, and then you also are going to get the other stuff from Japan and Eurozone. But for the most part, I hope you see what's going on. Now you had Powell. Everybody was waiting for something. If you did not get a movement, all of these data sets affecting everything from services down to non-farms and PCE. And I think I skipped it. I think Friday you're also going to get the PMIs. Yeah, they're right there. So that's also going to be another one. But it's a bunch of data ranging from almost every element of the economy. But now after Powell, what we want to see, if Powell's saying, well, we're going to wait for the data, we're going to see, maybe we raise, maybe we don't. I haven't changed the script in 6 months. We want to see if any of that data can change the script for Powell and get the bonds moving. So this week has a lot of data. We're coming off of the recovery of Powell and even good NVIDIA and watching what's happening. Like I said, a lot of the market has been bearish, but now here's the odd part. This is from Michael Hartnett. Now I'm skipping around. I'm going to jump around and show you some of the things that he outlined over the weekend, but the first thing he has here is the bank Bank of America Bull and Bear Index, and right now it is pretty much at neutral. You could even see this little chart. I'll try to zoom in on it a little bit more, but it's pretty much right at the middle of any extremes. Even though the market has moved around quite a bit, we're still kind of at this level. I mean, even if you pull it back on a 1 year, you could almost argue the market has borderline not moved in even 12 months. I know, that's wild to think, but that's the first thing, one of the things he discussed, not the first thing. Actually, one of the first things Michael Hartnett discussed, he was pretty much going over a lot of things. He thinks things are bearish. He has been bearish. He thinks that towards the end of the year, we'll see it even more, but he's just talking about some of this stuff right now and how he's not really surprised by what August did, but now where he thinks things are going. But I really thought there was some good info, and that's why I wanted to highlight it. And this was another thing he brought up, just some of the flows to know. And he's saying it is the 28th week of inflows, the longest streak into treasuries since 2010. Emerging market debt is the biggest outflows since SVB, and tech has had the largest inflows in the last 10 weeks. He even talks about the regionals, where things are at. I think he opens by even talking about how stocks, crypto, and everything is still up anywhere from 15 to 30%. I think crypto is still holding there. So he brings that up, and then he goes over these charts, and this one in the top left, this was the main thing he was talking about. And he's saying, yeah, I'm not surprised about August, and I wouldn't be surprised towards the end of the year and where we go from here, but global liquidity of central banks is dwindling. It's kind of some of these little fun facts we've been pointing with bonds and all of that, but now he's saying he's not surprised, and if this trend continues, he does not really see stocks hanging on for too long. But if you take notice here, he has a bunch of other charts. He's talking about the reverse 7 making a double top. He's talking about real assets versus non-financial or non-real assets. Mortgage rates hitting a high and then dumping. I think there's another chart that's not on here. What else does he talk about? Oh yeah, the home builders. He said even if you look at the home builders, a double top, and it's just like a 7-page thing of everything in the economy, and just why he's saying he's not surprised. Like we said, he's been bullish all year, and now he's just still bullish. He's held to it, and he's pointing out some of these factors. So it's interesting, but the main point, I'm boiling it all back to where we started, this neutral thing. You're getting a lot of this back and forth. Powell, the story, it's not changing. We need the data to change the story for us. Otherwise, we're going to kind of get this back and forth. But like we brought up on Friday, shout out to Slade. Sometimes when you get a little bubbly and prices get too high, I mean, even when that data and numbers come out, maybe we've already moved too much, or maybe we keep moving around. And as far as price discovery, maybe it's already been dislocated, and we won't see that until the next event. But Chad, there's nothing to worry about. We got to make it through August, and then September seasonality. We see what happens. But now, let's finish out August, and let us get into the plays. So, right off the bat, we got a bunch of different plays, but I also am just going to be riding a lot of last week. There was a lot of damage, my goodness. Not only the AMD, the NVIDIA, the chips, and it does lead me to an idea, but we're going to be looking at that in about a week or two. But for the most part, watching out for that. There was a lot of damage there. I feel a lot better, though, after how Powell played out. And then we have the Rite Aid. It was absolutely death and destruction. So let's start with that. Remember, I went very big on this. Right now, I am down about like $19,000 or like $22,000. There's like a little bit, pretty much there's like $3,000 left on the covered call, and that's what's giving me that fluctuation. Did not average down since the first purchase, and I'm glad the covered calls work, but as you see, you know, my break even, I'm like 50% below that now, because on Friday, there was an article that came out about from the Wall Street Journal. It was about Rite Aid's bankruptcy, and they said sources close to the matter are saying that Rite Aid is pretty much going to be filing for BK soon. So if you remember, when we made this play, I said, I think it is undervalued, and I think it's a dumb play, but for the most part, I think it's either extremely undervalued or they're going to file for BK, and then we're going to get one of those events. Why did that not happen so far? Because they didn't file for BK, and we got murdered off of the thoughts of it. So that's what happens playing with the sensitive play here. like I'm saying, the logic still remains. I'm just getting murdered on it now. And now how I plan to move forward, I think it might take me a couple of time or a couple of months maybe, but here is the general logic that I am looking for. I am in the 2025 contracts, and even though they have a lot of time, they've already decayed now to a good amount. Like I said, there's only about like $3,000-$4,000 of value. It just depends. Sometimes if the bid's low enough, I haven't been able to get filled. At the worst case, it's $4,000. Best case, it's like $1,000 remaining. So here is the plan moving forward. I did not average down. I'm going to give it some time, but the idea is I think we actually need a bankruptcy news or restructuring news to like get things popping off. And essentially what I'm going to be looking for, the general idea, we give it a couple days, close out of the covered calls, realize the $15,000 or the $19,000 that it gave us, get that gain, and now I could either average down, or the idea would be wait till that news, then average down, have more size, and then when the calls come back up again, we could try to get our way in and out of that and then see how we're able to finesse it after I average down. But like I'm saying, I think this is going to take a couple of months. So bad news how it played out. That's the risk involved with it. I'm very disappointed by it, but I think I'm going to be able to finagle my way out of it, and we'll see. But still riding out for that. That's the plan. I know a lot of people are going to ask me, so I hope this does help, but it's going to be about finagling the covered calls. And if you didn't do the covered calls, we need to wait till there's actual restructuring news. And in the meantime, it can go lower, or maybe if the fact that just on Friday it was all from a source, maybe we watch it get a bounce. But for the most part, I'm just eyeing how to close the covered calls, wait for the catalyst, and then use that as our round 2 and then the second buy on it. So tough loss for now, still riding out that one. That is going to be play number 1. Then play number 2, I don't know. Maybe I don't know if it's the FOMO in me, but there's something about it. NVO, Novo Nordic, did I say it right? And then Eli Lilly. I don't even think NVO pulled up. It's not even showing the name here in the chart, but this is the company that made Ozempic, and if you saw them on Friday, even Eli Lilly, even throughout the last week, they held up very good. It is if they did not respond to anything going on. There's been a lot of value rotations and a lot of different phenomena that we've seen, but here, it's not only about value, they're an outperformer, but there's just constantly more headlines on these GLP-1 drugs. So even on Friday, Novo, there was good news that their Wegovy drug even helps with like heart disease and stuff like that. So they were able to hold up. I'm going to be watching these again. I've been hesitant to play them. Same thing with like NVIDIA, and then right when I play it, I get clapped on it. So we're going to see how it plays out, but watch out for that news and just see if it does continue to outperform. I definitely think that could be a good area to keep your eyes out for. So watch out for that. That's play number 2. And then finally, NVIDIA and the chips. Like I said, I'm still down on them, but man, the thing I like is the value plays. I think Intel, I'm down on this one the least, and honestly it's moved the most stable since the NVIDIA earnings, and I really like it. I think it has to do with things being beaten down, especially as we're getting some of this fear and higher interest rates. So Intel, I have not averaged down since I got it. Depending on how this week plays out, if it really does hold up or not, I will be watching that to see for the average, and then hopefully we can get the chips rising up, get out of some of those plays, or maybe ride them out for a little bit. Then we'll deal with the Rite Aid. We'll see whatever the market throws at us, respond to the data, and before you know it, the end of August, then September, then Halloween, then the end of the year. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, opportunity is everywhere, and opportunity is wind. You will feel the gust of wind. Sometimes it is there, sometimes it is not. But the question is, are you positioned to catch the wind and the opportunity? But Chad, we have a lot to go over still. We have a little bit more until the end of the year, but I know you're ready for it. Stay hydrated, stay healthy, and I'm gonna see you in the morning. That's it, bro. I'm gonna see you in the morning. I'm just. We got power. We had Navi. How you feel? I feel good, man. I got to rest up on the weekend. I got to go over game plan. I'm like, you know when I wear the bull shirt, bro. Don't let me. I don't want to make it. It's not awkward. Okay, I'm going to leave. You have a good weekend? I had a good weekend. I hope you had a good weekend. All right, we good. All right, team on 3. 1, 2, 3, team. No, SGD on 3. 1, 2, 3. SGD on 3. SGD on me, huh? 1, 2, 3. SGD. Oh, you know what I'm saying? No? Is that? I'm with it. Don't with it. It's not. Okay, horde.